So a lot of people ask me, is that going to be a Santa Claus rally, which is a seasonal pattern for many years? Last year, Santa Claus did not come. Okay, Santa Claus means a year-end stock market rally, right? Bullish market. Last year, because there's a recession, so Santa Claus don't have enough money to come and give the gifts. So this year, the stock market recovered, at least in the US market, and I think he's going to come and give us some gift and rewards. Yeah, and also confirm with the technical chart, because of the last FOMC meeting, the Federal Reserve decided not to raise interest rate for this round, but there was no mention about whether they will raise in December or January onwards. But from the tone and the Q&A with Jerome Powell, who is the Federal Reserve Chair, the market has taken it a positive side. He was mentioning that inflation is so far within control, although it can still increase later on, so they will need to continue to monitor those indicators to take action at a later stage. From the Q&A tone and his responses, it seems that he's actually thinking that the US can avoid a recession, because the unemployment rate is actually still pretty low, which is at 3.9%, although they take up 0.1%. But there are a few factors that are actually in better control, like the crude oil, despite all the tension in the Israel and Gaza war, and we also have the Russian-Ukraine war earlier, which could have caused the oil price to increase. But despite all that, oil price is still in a range bound, so it's not hiking a lot. That helps relieve some of the pressure in terms of the oil-related inflation. And the next one is the housing market has been trending down. One more area which is on a wage increase, right? With the unemployment rate just ticking up slightly, it's actually helped to relieve some of the concern on the wage increase. And the latest wage report shows that it's actually ticked down from 0.3% wage growth per hour to 0.2%. These are some of the key concerns from the Fed. And the next important aspect that was mentioned is the economy is still very strong. Right? So when the economy is strong, it's actually good for companies, right? And it's good for the stock market because companies can make more money. And that's a very, very important part, because the Federal Reserve have two main charters to balance, right? One is maximum employment, and the next one is control inflation, right? So maintain inflation as a target rate of 2%. It is good for them to be able to do both at the same time. But the key language that was spoken on a concern is whether the economy will be too strong and eventually the inflation will pick up again. So this would be one of the main concerns that the Fed has. In the coming months, we need to look at the GDP figure, the jobs opening, which is also a leading indicator. The last job opening was very good, so the Fed could be concerned because the stock market actually came down for a while. But because the non-farm employment report actually came down, right? So it's balanced back the concern. If we monitor what the Fed monitor, we will be able to anticipate better what will be their actions. As long as we have the money management in place, right? We have the anticipation that it's going to be bullish for until the end of the year, right? So we just need to follow the technical chart, right, to make sure that we protect ourselves, and as the stock go up, we move our stop loss and protect. Then we can ride a rally and yet manage our risk. How do I think about the FOMC projections moving forward? Right? Nobody can be able to be so precise in anticipating outcome because the Fed is also monitoring the indicator. They'll be reacting to the indicator. But from my perspective, based on what the Fed funds future, right, is anticipating a flat, no more hike from now on, and a potential rate reduction in June. But I think we should not be overly optimistic about it. Right? We need to continue to monitor the inflation indicators. So there's going to be another inflation indicators coming up in the mid of this month, which will be a market mover. Right? So if the inflation is still within control, I would say it will be more bullish for the market. We will have a year-end rally all the way until December. And from my perspective, if the inflation indicator is within control for this mid of November and also mid of December before the next meeting, likely they will not raise hike in December, but they could still possibly do so in January if the oil price take up or the inflation take up. Yeah, so we should not be overly optimistic. As in, after trading for 30 years, I always remind myself to be prepared for anything. We do have our views. Now it's on a positive side. We always confirm with the technical chart, no matter what our opinion is or what our projection is. And the technical chart shows us there's confidence in the market, right? There's consecutive bullish candle. The 𝗀𝗀𝗀𝗀, right, which represent the Nasdaq 100 ETF, has already broken above the downtrend channel and slightly going to form a higher low. So this is likely the year that we can have a year-end rally. Santa Claus has not come in for too long, okay? So that's a good chance. So if you want to be able to ride this rally, it's very important to learn it properly, right? Rather than just, because of what I said, you buy the stocks. Like, that's not the right way, because you do not know at least which is the better stock to buy and how to manage your risk and when to get out. So it's very, very important to learn it in a systematic manner. A lot of people ask me, is it the right time to buy stock right now? They may perceive that, oh, stock, a lot of the tech stock has rallied so much, can it still go up higher? Yeah, my take is there is, right? So of course, not every single stocks, and you need to learn it properly to know which one the evaluation still have more room to go. And one of the important reasons is next year, the economy will recover even further, right, compared to this year. And there's a election, right, coming up in the second half of next year, right? November is the election time, and usually before election, right, there will be a rally, right? Not all the time, because there are other circumstances, because right now there are geopolitical tension and so on. But in general, based on the projection right now, the economy will gradually recover from early next year to end of the year, and it will start to pick up pace in second half, just on time, right, for the election. I guess the next president, right, is going to be very happy, okay, because there's going to be a positive year. And due to that, when is the best time to invest? It should be right now. You don't invest when times are good. You invest when times are not so good, so they can get a better valuation. And you need to learn it so that you will be prepared when those opportunities arrive. Okay, so if you want to be able to ride this trend, do join us and learn how to do it in a systematic and safe manner. That's very, very important, okay? And a repeatable process so that you can use this knowledge forever, right? This is not something that will just benefit you for 1 year, but it can benefit you for a long, long time. And time is of the essence, right? If you wait longer, first of all, you will miss some of the important entry point, because the stock market is 6 to 9 months ahead of the economy. A lot of people do not realize that, right? People buy stocks right now in anticipation of the economic recovery. They don't buy only when economy recover. Like that, at that time, the price will be too high. Okay? And you will learn some of these very, very important elements about how the stock market works. Then you will be able to invest, with peace of mind. That's the most important. Last but not least, to be able to overcome inflation and grow your wealth in a safe manner. Do click on the link right now and join us for the free 3-hour webinar where we will share with you a systematic and safe approach for the financial market. See you there.